Russia's economy is shrinking despite soaring oil prices. What's really behind this unexpected contraction, and why should you care right now? Oil prices are traditionally a lifeline for Russia's economy, especially under Putin's wartime conditions. Yet, despite crude oil prices holding steady above $90 per barrel in early 2026, Russia's GDP shrank by 2.5% in the first quarter. This signals that high oil revenues alone are not enough to offset deeper economic pressures. The Washington Post highlights that sanctions, supply chain disruptions, and reduced foreign investment are strangling growth, even with oil's strong global demand and pricing. Sanctions remain a critical factor in Russia's economic contraction. The loss of access to Western technology and financial markets has severely impacted Russia's manufacturing and high-tech industries. Companies that once relied on imported components now face production halts, reducing overall industrial output. This contraction in diversified sectors undercuts the gains from oil exports, showing how sanctions are effectively constraining the wartime economy beyond just energy exports. Inflation is adding pressure on the Russian economy. Consumer prices have risen over 12% compared to the previous year, driven by supply shortages and currency volatility. This inflation squeeze reduces purchasing power among Russian households and increases operational costs for domestic companies. Even as oil revenues flow in, the overall economic environment is tough, reducing investment and consumption, which are key to growth. While the energy sector sees some gains, the broader Russian population is feeling the pinch. Middle-class workers face growing job insecurity as manufacturing and service sectors contract. Shrinking real incomes and rising inflation hit everyday Russians hardest, fueling social discontent. This widening gap between oil profits and public hardship threatens economic stability and raises questions about the sustainability of Putin's wartime economy. Looking ahead, experts warn that without easing sanctions or implementing significant economic reforms, Russia's wartime economy could continue shrinking throughout 2026. The reliance on oil revenues is not sufficient to offset systemic weaknesses. Continued contraction risks destabilizing Putin's political and economic control, while global energy markets remain volatile. The situation demands close monitoring, as it could have broader geopolitical and economic consequences. For you, this means global energy prices and supply chains could remain unstable, affecting everything from gas bills to grocery costs. Understanding Russia's economic struggles helps you grasp the bigger picture behind market shifts and geopolitical risks. Stay informed. Subscribe now for daily updates on how world events impact your wallet and future.